The fact is, unlike gold, which is really hard to measure, which isn't really done in the physical markets, where the derivative markets dwarf it. Like, for example, nobody knows how much gold is in Fort Knox. Nobody knows how much gold is backing central banks. Bitcoin is an open transaction ledger and it's all public. So it is really easy to know. So if Bitcoin becomes, as Paul Tudor Jones famously said a few years ago, the fastest horse and becomes the global store of value, all of a sudden we have a real-time, public, transparent scorecard that measures the value of currencies that are backed by nothing, like the dollar.
For months now, U.S. regulators, led by the Securities and Exchange Commission, SEC, and the Commodities Futures Trading Commission, CFTC, have been launching attack after attack on various crypto-related firms under the guise of preventing another multi-billion-dollar collapse in the cryptocurrency industry. Everyone from the CEOs of major exchanges like Binance and Coinbase to financiers, cryptocurrency initiatives, and even important figures in the industry like Binance's own Changpeng Zhao. In the regulatory crackdown aimed at restraining the excesses of the cryptocurrency business, almost no one or object has been spared. Gary Gensler, the head of the Securities and Exchange Commission, is among many who have suggested that scammers have enough latitude in the cryptocurrency market to take advantage of unsuspecting Americans. The Bitcoin sector has not invented this particular argument. Notable players in the cryptocurrency sector, such as Michael Saylor, have referred to the current regulatory framework as the Wild West because of the prevalence of unregulated and centralized exchanges. Saylor and other top figures in the sector have been lobbying regulators to clarify the rules so that dishonest businesses may exit the market. Compared to the current actions of the SDC and other regulators, this is a huge step backwards. These failures are not unique to the Bitcoin business, yet they appear to preoccupy them constantly. The current banking crisis is a good illustration. Despite the banking industry's many problems, regulators aren't battling tooth and claw to undermine it. There must be more to the government's attack on crypto, then. Dave Weisberger, CEO of CoinRoots, claims that governments are worried about Bitcoin and the crypto business because the blockchain makes finance more transparent. Weisberger argues that the United States government is especially vulnerable to Bitcoin because it is the only asset that may really undermine the dollar's status as the world's reserve currency. Similar to the current state of the Bitcoin market.
It doesn't threaten anything right now. In the long run, it will. So if you looked at Alan Greenspan over his years, he always passionately looked to see what the price of gold was, because gold was the original, for thousands of years, the benchmark upon which all currencies were measured. And there are lots of people who will say that gold is actively manipulated down. We could talk about it, but at the end of the day, it still is something that's a benchmark for what people would call monetary inflation. So if Bitcoin grows into that digital gold valuation, then it will make it hard to print money without seeing the consequence of that monetary printing. That's what I mean by that. Right now, Bitcoin is well short of that. It would have to rise by a factor of 20 to be at that level. But there are people who believe that this is a possibility, and I think that motivates a lot of what's going on politically. There are those who want to kill it, quote, in its cradle, in order to stop Bitcoin from growing up and becoming that global store of value, that to be that scorecard, which will make monetary printing harder.
You've mentioned it's a direct threat on their ability to print money. Why would they allow that to happen?
Well, because it's gradual. It's really quite a gradual thing. If Bitcoin rallied all the way to 500,000 plus, it would still be slightly less market cap than gold. Gold has yet to demonstrate any ability to put a brake on monetary printing. So right now, Bitcoin is more of a curiosity for most of the people who are concerned. I think that you will see if it rises too high, at that point, there will be those who want to squash it. The issue is there critical mass? And the issue is it done in a incremental enough fashion to coexist until eventually it becomes the ability for people to opt out? And like Michael Saylor, I think that incremental likelihood is far more likely to happen. I don't think you're going to get a moonshot Bitcoin going to 500,000 and then the next year going to 5 million in order to replace all global currencies and getting to a Bitcoin standard. I think that it happens from the periphery in. So countries, we've seen El Salvador, very important news this week. El Salvador's bond rating being raised back, basically saying that when the rating agencies cut their bond rating because they adopted Bitcoin as legal tender, that's now been reversed. That's kind of a big deal. If you see more countries on the global periphery, not G7 basically, adopting Bitcoin as legal tender or embracing Bitcoin instead of dollar pegging, I think that you'll start to see that become a bigger trend over the next 5 years. And that's kind of the point. So if you're a policymaker in the US, do you really fear something that is going to happen when you're no longer in the job? And I think that's how they're looking at it. Regulatory pressure, I think that they don't believe they can without, if you're Citigroup, you're regulated. I mean, MicroStrategies is regulated by, I guess, the FTC or whatever. But if you're a big money center bank, you're regulated by the Federal Reserve, by the Office of the Comptroller of the Currency, by the SEC, by the CFTC, by the FTC. You also have the Treasury Department looking over what you're doing because you're a too big to fail institution. These people have enormous regulatory, compliance issues. And so the idea that they would ever invest in crypto on their balance sheet, when we just saw and are seeing banks, for example, just the ability to have deposits from crypto holders, from crypto exchanges, is considered to be risky. And the various regulators have said this. They call that risky. Directly owning it is definitely off the table right now. Now, will that be the case forever? Absolutely not. Is that the case today? Absolutely true. Is it the case in other countries? Well, that's an interesting question. I think you may very well see it as a treasury asset in the next 2 to 5 years, but it's going to start elsewhere. It will not start in the United States. I mean, treasury is for companies that are a bank, where it will depend. The most important thing when banks look at treasury is capital requirements. So, for example, if you have treasury bonds, you take almost no haircut. That is considered good collateral for everything that you do. If you buy real estate, that is haircut dramatically. If you buy crypto today, it's haircut almost 100%. You almost get no value for it. So as long as the capital requirements as what's good collateral are the way they are, it's not even part of the conversation. Now, that's not true if you're an asset manager and you're recommending portfolios to your clients, where you've recommended historically 5% in precious metals or something like that in what's called the 60-40 portfolio, whatever the nuance between bond and equity weights and precious metal weights and alternative investment weight. Bitcoin has yet to enter that conversation in a meaningful sense. And there's a lot of money there. That is where I expect to see it entering the conversation more and more. And it already is in countries outside the US, and it's starting to gain some traction in the US, but that's far more than what a bank can do, because banks will be the last place, and that's because of capital rules. Reason is because there are many conspiracy theorists out there that believe that what is actually happening from the US regulators is they are looking to try to shut down those businesses or make them scrap, such that the banks could then come in, which they have a tighter relationship with, and actually build back that sector. That is what the conspiracy theorists say. I'm not so certain that that's what they're trying to do. I think it's much more about jurisdiction. And I think that most of the really regulatory issues that we have today is basically a jurisdictional food fight between the SEC and CFTC and state regulators and federal regulators. And you see lots of me. It's almost like children playing on the playground is how our regulators are effectively approaching this. And I think the knock-on effect of that has been potentially to move in the other direction. The banks, just to go back to the banks, as you mentioned, yes, I had many years sitting as a managing director on Wall Street. The banks will go where they think they can make money, period. So they will always try. So you saw in 2017, when Bitcoin first started to rally, all the banks started up efforts to investigate crypto. And then when 2018 crypto winter set in, they shuttered or mostly shuttered those businesses and those efforts. And today, over the last few years, those efforts exist. I mean, pretty much every bank has some investments, at least, and has something going on in the digital realm, because they don't want to be knocked out of that realm. but those somethings are definitely less than they would be if it wasn't for the regulatory uncertainty in the US.
The industry may be able to undo the damage it has done to its own growth in the United States if the law passes, and the regulatory crackdown is slowed in some way. Do you agree with Weisberger's assessment of the interview? Use the space below to share your thoughts and opinions. Thank you for watching Market Empire, and we hope you found this video insightful. If you enjoyed this content, please give us a thumbs up and subscribe to our channel for more informative videos. Stay tuned for more updates on the world of finance, investing, and economics.